Thanks, Marco. Coinbase is one of those look into the future types of stocks, which means it carries great risk. Here's 2 ways to play it over the next couple of months. Without many trading days under its belt, analyzing the coin chart is both easy and difficult at the same time. Let me show you what I mean. First, we'll take the high on the IPO as a top. That's about 430. We'll also mark the low on that day, which is about 310. Quite a big first day range with a lot of stock changing hands. You can see it was about 80 million shares. Now you see that once it broke 310 around here, that became resistance. Here, here, and here. On this move down in early May, coin did find some support around the 250 level, only to fail about a week later, making 250 the new resistance level, which held several times over the last couple of months. The low here at around 210 has now held 3 times, almost 1 month apart each time. Now, if you're looking at a coin chart, you have to notice the correlation with the Bitcoin chart. This is where the coin IPO happened. The charts look identical, except Bitcoin made a quick move higher here in the last couple of weeks. So what are the bulls looking at? Well, with earnings around the corner, I think the bulls are focusing on this 250 to 310 range. Like Bitcoin's latest move, if it can break through this immediate resistance, it likely makes a quick move toward 300 to 310. As a bull, you must be a little concerned with the supply of stock above these levels. So how do you play this scenario? Well, using options, I chose the September expiration. I get earnings as the catalyst in a couple of weeks and a little more time to get this stock going again. We're looking for the upside, so I can shade the puts and use 310 as my target stock price. You can see the pointer land right around the 250-255 strike. Because I'm concerned about the huge supply above 310, I will consider a call spread. I chose the 260-290 call spread where I pay $11.80 for one of the 260 calls, and I sell one 290 call at $5.80. Net, I pay $6. The maximum value that the call spread could have is $30 with the stock above 290. That's 290 minus 260. Since I paid $6, my ROI would be 24 divided by 6, or 4, which is a 400% ROI. Now the bears. The bears are looking for a break below the lows, and they're looking at a bearish flag that oftentimes does this before moving up again. We'll see. But with such a small window of data, no one knows where the bottom could be in the next few months. I'll take a stab. By looking at the difference between the high and the low of this 2-month band, which is about $50, using approximately 260 here and the 210 low, subtract 50 from the 210 low, and that would get us toward 160. But again, no one really knows. What happens if Bitcoin trades through 30,000 and continues lower again? Who knows how coin will react? So given that, to play the downside, I am looking at that break of 210 to get the weak longs to panic. 210 could see a quick drop towards that 160, 180 range. Using September in the earnings again, with a 160 target stock price, I like the September 200 puts at 680. At 160, the ROI is 488%. At 180, the ROI is close to 200% at 194. That's certainly a big drop, but I assure you that with coin's valuation, it's definitely possible. There you have it, Marco. Back to you.